traders. We will study current Bitcoin's fundamentals with the intent to project its future value. This is the first part of the 3 videos we will publish with the aim of predicting Bitcoin's long-term trend. The second part will cover the Bitcoin halving cycles, which fundamentally is important in understanding the Bitcoin market cycle. The third part will cover the Bitcoin dilemma, which describes how we would treat each wave in the past 3 cycles of Bitcoin in order to project the future, which is its 4th cycle. This part has 2 possible scenarios that we will discuss later on in detail. We will use these 3 segments of analysis in order to come up with a sensible projection on Bitcoin price in the 4th cycle. To be able to project Bitcoin's next move, we have to evaluate its current fundamentals based on current events. Bitcoin is affected by various factors that impact its fundamentals, including adoption, regulation, market demand and supply, innovation and technology, and economic and geopolitical events. This video attempts to describe the current state of Bitcoin and how these factors affect Bitcoin's future price. To understand current Bitcoin fundamentals, let's go back briefly to 2008, where the Bitcoin idea started. This is the Bitcoin's first ever block, also called the Genesis block, which bear a hidden message from Satoshi Nakamoto, a screen name for the group of developers behind Bitcoin, which said, "The Times, January 3, 2009, Chancellor on the brink of second bailout for banks." This message has a strong significance to what's happening in the financial system right now. The financial crisis of 2008 was one of the biggest crises in modern history, triggered by the collapse of the U.S. housing market and the widespread use of subprime mortgages. As the housing bubble burst and homeowners began defaulting on their mortgages, many financial institutions that had invested heavily in these subprime mortgages began to suffer significant losses, which in turn led to a wave of bankruptcies and failures in the financial industry. Lehman Brothers was one of the biggest casualties of the crisis, and its collapse had far-reaching effects on the global financial system. In response to the crisis, the U.S. government and the Federal Reserve launched a massive program of bailouts and stimulus measures to try to stabilize the financial system and prevent a broader economic collapse. Quantitative easing was one of the key tools used in this effort. Quantitative easing involves the central bank buying large quantities of government bonds and other assets to increase the money supply and inject liquidity into the financial system. This had the effect of lowering interest rates and making it easier for businesses and households to access credit, with the intention to stimulate spending among businesses and enterprises, considering the availability of money from low interest rates. This expansion of the money supply raised concerns among some critics that it could lead to inflation over the long term. While the intention is to uplift the economy and to save the broader financial system, the solution does not come without risks. There are several potential risks associated with quantitative easing. One consequence of quantitative easing was that it led to a significant expansion of the Federal Reserve's balance sheet, as it purchased trillions of dollars worth of government bonds and other assets. For example, the Fed's balance sheet increased from $900 billion in August 2008 to over $2 trillion by the end of the year, and continued to grow to over $4.5 trillion by the end of 2014. This move had many repercussions. Inflation. One of the main risks of quantitative easing is that it can lead to inflation, as the central bank injects more money into the economy. For example, quantitative easing led to the 2010 to 2011 Consumer Price Index to increase to 2.5% of what used to be a yearly average of 1.6%. This can erode the purchasing power of consumers and reduce the value of savings. As a result, this may also lead to currency devaluation. If a country engages in quantitative easing while its trading partners do not, it can lead to a devaluation of its currency. This can make its exports cheaper and more competitive, but it can also make imports more expensive and lead to higher inflation. Among the worst effects of excessive printing of new money is the unequal distribution of wealth. Quantitative easing can also exacerbate income and wealth inequality, as the benefits of the policy may disproportionately go to the wealthiest individuals and institutions. This can lead to social and political unrest. Overall, these effects highlighted some flaws in our current traditional fiat financial system. Since traditional finance is centralized, it can just print money on a whim to bail out banks during crisis situations that devalues the currency over time as a result of inflation. This is among the major reasons why Bitcoin was created under the Satoshi vision. At its core, The Satoshi Vision is about creating a decentralized, peer-to-peer electronic cash system that is not controlled by any central authority or government. It is a system that allows individuals to transact with each other directly, without the need for intermediaries like banks or payment processors. Some of the key elements of the Satoshi Vision include decentralization. Bitcoin is designed to be decentralized, with no single point of control. This means that no single individual or entity has the power to manipulate the system. Transparency. All Bitcoin transactions are recorded on a public ledger, known as the blockchain. This provides transparency and accountability, as anyone can view the transaction history. Security. The Bitcoin protocol uses advanced cryptographic techniques to secure the network and protect against fraud and theft. Limited supply. The total supply of Bitcoin is limited to 21 million, which helps to prevent inflation and maintain the currency's value over time. Open source. The Bitcoin protocol is open source, which means that anyone can view and contribute to the code. This helps to ensure that the system remains transparent and trustworthy. Overall, the Satoshi Vision represents a radical improvement of the traditional financial systems. Then here comes the COVID-19 pandemic in 2020, which had a major impact on the global economy, disrupting supply chains and leading to widespread business closures and layoffs. Once again, the Federal Reserve responded with a range of policy measures aimed at supporting the economy and stabilizing financial markets. These included cutting interest rates to near zero, providing emergency loans to businesses, and once again engaging in a large-scale program of quantitative easing. The disruption of supply chain led to some Fed policy decisions back in 2021 to 22 to avert the situation, which led to the increase of consumer price index over the past 2 years. To curb inflation, Fed has also been aggressive in increasing interest rates by 4.5% since March 2022. For these reasons, the economy slowed down and led to some stock and crypto crashes in 2022. Among its recent biggest casualty was the Silicon Valley Bank bankruptcy. When interest rates rise, bond prices fall, which erodes the value of bond portfolios of some major banks. In the case of SVB, its portfolio had an average return of 1.79, which is far below Treasury yield of 3.9%. The rate hikes sent borrowing costs higher, and while tech startups struggled to raise capital from venture capitalists, they were forced to draw their deposits held by SVB. This situation led to a 48-hour bank run, which forced the bank to shut down customer withdrawals and declared bankruptcy. The bank's stock plummeted to 70% and has since halted trading. Similarly, all banks face interest rate risk today on some of their holdings because of Fed's aggressive rate hiking campaign. There are at least 186 banks that face similar risk to SVB should their customers draw their deposits. We have a new financial crisis that is unfolding, and while banks are falling, Bitcoin rose to about 45% over the past 30 days, making a case as we are at the brink of a second bailout for banks. Another worth noting is the recent post from Major Jason P. Lowry, a U.S. Air Force officer who presented his theory on U.S. defense officials, including the President of the United States, on the strategic relevance of Bitcoin, hinting at a possible hash war in the future. We can only speculate that they now see Bitcoin as a threat to the current financial system, or they see Bitcoin's implication of a possible shift to a new financial system with Bitcoin or a similar technology as the new standard. Everything we have discussed so far were all positive for Bitcoin's further drive on its adoption, but the question remains, does these developments put BTC in a position to rally further than its all-time high? And if it does rally, can it possibly reach higher than 68K, 100K, 300K, or even $1 million? Among the major drawbacks for massive Bitcoin adoption is environmental concerns. The energy consumption of the Bitcoin network is a growing concern, with some estimates suggesting that its proof-of-work consensus mechanism consumes as much electricity as a medium-sized country. The highest Bitcoin mining difficulty ever recorded was in September 2021, when the price was hovering near its all-time high at 68K at block height 689,471. Based on the estimated hash rate, the average energy consumption of Bitcoin miners at that time was around 120 terawatt-hours per year, according to the Cambridge Bitcoin Electricity Consumption Index. To put this into perspective, 120 terawatt-hours per year is a massive amount of energy, and not many countries have a comparable level of consumption. To give you an idea, here are a few countries that have a similar or slightly closer level of annual energy consumption. Switzerland, 58.2 terawatt-hours per year. Belgium, 84.5 terawatt-hours per year. Austria, 72.7 terawatt-hours per year. Singapore, 50.6 terawatt-hours per year and Norway, 124.9 terawatt-hours per year. According to the latest available data from the International Energy Agency in 2019, the Philippines' total electricity generation was only around 88.2 terawatt-hours per year. Theoretically, if Bitcoin price had to rally to $300k US, that would roughly put Bitcoin's energy requirement to 500 terawatt-hours per year. 500 terawatt-hours per year is a substantial amount of energy consumption. Here are a few countries that have a similar or slightly closer level of annual energy consumption. Canada, 562.6 terawatt-hours per year. Australia, 261.6 terawatt-hours per year. South Korea, 514.2 terawatt-hours per year. Mexico, 290.3 terawatt-hours per year, and Iran, 236.9 terawatt-hours per year. Now if Bitcoin price had to rally to $1 million each, that would roughly put Bitcoin's energy requirement to 14-fold, which would be 1,700 terawatt-hours per year. This is a significant amount of energy consumption, and not many countries have a comparable level of consumption. However, here are a few countries that have a similar or slightly higher level of annual energy consumption. This is roughly 40% of United States energy consumption at 4,297 terawatt-hours per year, or 25% of China's consumption at 6,910 terawatt-hours per year, which is also significantly higher than Japan at 1,056 terawatt-hours per year, India at 1,383 terawatt-hours per year, and Russia at 1,059 terawatt-hours per year. This is one major flaw of Bitcoin's decentralized nature. It requires a vast amount of energy to maintain massive adoption, which is why Bitcoin devs developed Segregated Witness and later on Bitcoin Lightning Network to tackle its scalability issues. As concerns around climate change and sustainability continue to grow, some investors and users may choose to avoid Bitcoin due to its environmental impact, which is why a move to Web 5 that uses Bitcoin only as its native currency would have problems of massive adoption. In other words, Bitcoin's success will also lead to its eventual death or further reiteration in the future to make it scalable in a manner that it will not have massive effects on the environment. Now can we breach the all-time high of $68,000 US? We will try to answer this as we dig deeper on our next video as we relate this information to Bitcoin cycles.